Hi, Matthew. Thank you for having me. I'm Ari Sussman. I am the executive chairman of Collective Mining. Looking forward to talking with you today about what we're doing in Colombia, the fantastic country of Colombia, and where the opportunities lie in the future.
Brilliant, Ari. Lovely to have you on the show. First time we've met or spoken, so we're going to keep this a fairly helicopter level, and I guess let the story wash over us a bit. So, Colombia will make some people nervous and others not. You've worked there before, so what's it like over there for miners?
So, look, Colombia, what is washed over people, which they don't realize, is Colombia has a very long and established mining industry. And I'm not talking about a traditional industry, which it also has historically, but also a modern industry. Okay, so the Colombia has, for instance, the largest open pit coal mine in the world and has currently operating what used to be the largest nickel mine in the world. I believe is about number 9 or 10, as we speak. So this is an industry that is well established in the country, that has its own agency that lobbies government, is organized, has a very strong mining code in place that is favorable to all parties, and has been a great place to invest. I think, look, Colombia, what people misunderstand, Colombia has its challenges, and everyone knows security, right? I mean, that has been the problem historically, or at least in the last 50 years for Colombia. It was really, really bad in the 1980s and 90s, improved drastically really from 2000 onwards, but still has its challenges. But what people miss about Colombia is that it is the oldest democracy in South America, number one. Number two, it has excellent rule of law. Okay, having worked throughout different countries in Latin America, I can confidently say that the corruption level of Colombia is far less than other jurisdictions. And as a foreigner, or a gringo, as they like to call us, I feel that if I needed to go to court to sue someone, on whatever grounds, that was a Colombian, I feel that I would have just as fair a chance if I was to say sue in the UK, United States, or Canada. So it's a very strong business destination and a great place to invest for mining.
Right, and of course you've worked there before, Continental Gold, big success. What were the sort of learnings from that you're applying now to your new story, Collective Mining?
So look, let's stay on Colombia for a minute before we zoom in. So look, Colombia is maybe analogous to investing in Peru in, say, the 1980s. We know the curve that Peru has had in terms of growth. And why I compare it to Peru is population. Okay, this is not Chile. Okay, you don't have desert sitting everywhere with no population around and very easy for mines. So wherever you're going to find a mineral project in Colombia, there is going to be an area of influence with population around you. And so the comparison to Peru is this: companies that do well with their sustainability programs, get in early, work hard on communities for support, will build mines. Those that do not will struggle. And so we're going to see a mixed bag of permitted mines and ones that get denied in Colombia, just like we saw in Peru. My experience at Continental Gold, it was a roller coaster, a full circle roller coaster. I mean, we did many, many loops, up and down. Obviously successfully culminating with a sale to Zijin Mining for about $1.4 billion. But, what did we learn along the way? Community, community, community. As I mentioned, that is the only way you're going to succeed in this country. Secondly, education, breaking barriers. This is what Colombia is about. You go into a community, typically do not have any formal mining education, and typical fallacies we see in many countries, very pronounced in Colombia, like number one, agriculture and mining should not coexist. It's one or the other. We broke that down very succinctly with programs that we're currently using at Collective Mining. For example, alliance with the Colombian Coffee Growers Federation. It has all the bells and whistles of a typical, ESG related alliance. But most importantly, we go hand in hand to all the farmers in our area of influence and say, we mining want coffee, and coffee, we want mining. These are two industries that work together. They trade off each other, and they offer people more balanced economies. When one commodity's up, the other can be down, and vice versa.
Okay, but let's stay here, because I think what we saw last year was this kind of it felt like a synthetic overlay of ESG, and yeah, and again, people kind of railed against this. Companies would come on here every day of every week last year and say our ESG credentials are this, that, or the other. Right? You're making a very strong case, and you brought the conversation back to the importance of this. Is this some? Obviously, you sold Continental Gold back in early 2020, but do you honestly believe, are you sincere about your commitment to the social license component? Or do you truly believe, or what are the examples that you can give us to say, well, look, if we as a company don't do this, we will not be able to advance our project meaningfully?
So look, ESG, I don't like the word ESG. I mean, that encompasses three areas, right? Sustainability, environment, and government, right? The sustainabilities, I mean, look, environmentally, if you don't behave, to the best of your abilities possible and innovate, you're going to have problems in any country in the world. So we can push that box aside. Because of the population in Colombia, and you're dealing with populace, if you don't win the population over, you're dead. It's that simple. You're not going to advance. So when we start, I had to learn this lesson, in Colombia. It started in 2009. Okay, we weren't talking about ESG globally at that point. It wasn't a buzzword, but we learned, through mistakes, that we had to win over population, and we put some very innovative programs in place. None of which I care. I don't care at all about, are we checking boxes on some fund's checklist for ESG saying, hey, we're doing it. I care more about that we win over. And the biggest one is dialogue. Okay, so we started, at our former company, Continental Gold, a program at Buritica. That was the name of the town and the mine. We started a program called Plan Buritica. Okay, this was a platform monthly in the town square run by an independent agency that would allow anyone to talk about anything they want, good and bad. Mining was only part of the discussion. It wasn't, hi, we're a company, we want to win you over. It was, come complain, tell us all your problems, and let's see that the mining company with the community can maybe work together to solve some of these problems that have nothing to do with mining together. And that is really what builds trust, builds openness, builds tolerance, and that is our view on how you win over local populations. Building roads, these other things, we do it. Okay, so does everyone else. That is not a winning formula. It's dialogue and transparency and how you win over people.
Right. Okay. So I love this conversation because I have not worked there. You have worked there. You have built and sold a company there. Is the main sort of I guess negative that comes out of North America about investing in South America, whether it be Colombia, Peru, Chile, or even down in Ecuador, is this kind of socialism, right? And you're talking about social license. So what's the difference between those two things? Should investors, see socialism as a negative, or should they embrace it?
Look, I mean, Colombia, as an example, has elected its first left-leaning president in its history. Okay, so President Petro came into power last August, and he's just completed his 6-month review, so to speak. I'm bullish on it. I mean, a country like Colombia, for example, was very, very right wing, haves and have-nots, and I always felt there wasn't enough done by the haves to bring the have-not into a middle class population. And Colombia has one of the lowest middle class populations in Latin America. So I think this is great. I think we're in a period for mining where you really need to go about it wrong to not move forward, particularly if you are blessed to have commodities that are going to be part of a global energy transition, right? So you're in a sweet spot. Socialism wants transition. Left wing wants transition, arguably more than the right wing, and so I think that is a more supportive system right now for mining that is done properly, following proper guidelines and standards.
Okay, so you've talked about the type of company that you want to be in, that you want to build. Again, it was always about investors, right? So again, investors, may have a view about socialism. You've explained your position on that and why it should be embraced to some degree. But what are the types? So, what would you expect if you put your investor hat on? What would you expect a company to do, and how they behave to be successful over time in some of these countries where the news can be positive one minute and negative the next? There's a high flux in terms of news flow and sentiment in terms of investing in some of these countries. So what's the key to success? It comes back to my question earlier about, what are the things you learned from Continental Gold, which you think you can apply here?
This is you're describing Colombia to a T. I mean, right now, right? There's wins and losses. I mean, Anglo Gold, for example, has twice been denied for permits on two different projects. Sorry, not denied, kicked back, meaning that it's not complete. But that's in essence a denial, but a polite way of saying we're not giving you a no. We're just saying do more work. So look, I want to see always with any company who the management team is. And more importantly, I always want to understand who the boots on the ground team is. It's nice to have a guy like me sitting talking to you, in English, but for me, it's all about operation on the ground. I'm the executive chairman of this company. The president and CEO is an individual named Omar Osma. He is Colombian, based in Colombia, and spends his entire week in the town that abuts our main project called Guayabales. Okay, he will see the problems that I can never see from afar, and this is the greatest mistake I think made by mining companies, is too far away from the action, so to speak.
Okay, so let's talk about you now and what you've set out to do. So what's the plan day one with the business? What did you want to be? Was it just a case, we'll just replicate what we've done before, or is there more to it?
Not at all. It wasn't at all. Let's replicate it. Okay, so Colombia is the best frontier for new large scale discoveries with infrastructure in Latin America. I say with infrastructure because there are other good countries in the northern coast, but they're very remote jungle conditions, difficult to ever build mines in remoteness like that. It didn't get explored in the 80s and 90s, right? Because of the situation and the technology revolution that actually was really the last one that swept mining until today. I think there's a new one coming on now, where we invented heap leach technology, geophysics, advanced geophysics. Colombia missed that, so the big deposits weren't found. It's not rocket science to know that the Andes mountain chain continues right from Chile right up through Colombia, right? So, we're just at the beginning. So look, our last company, Continental Gold, we found a high grade vein system, okay, porphyry related vein system. Where's the copper? Where are the porphyries? I mean, that is always what comes next in the evolution of these countries. So the Chile boom of copper discoveries, albeit I'm sure it'll be at a smaller scale, is what's coming next. So we set out to go capture that porphyry part of where the evolution of a Colombia will lie next. And that is how we went about it. So we put together a team of experts on porphyry systems and went out and put together our two projects, which are both porphyry style targets. And that's where we're going with this. Next, in the future, Colombia will start to evolve towards other commodities like nickel, lithium, etc. But those don't exist today, other than the one big nickel mine. I'm unaware of a single showing, for example, of anything nickel in the whole country, or lithium, for that matter.
Okay, so it's not a direct comparison to what's gone before, but day one, you're saying, right, because the management hold, a big chunk of this, that a third of the company owned by management. You've invested in it. You must have set out with a goal in mind. Is it to get into production? Is it take through to development, flip it? I mean, what are we buying into?
Okay, so I look, whether my last company, we built a mine and sold it as it was about to declare commercial production. Okay, I didn't intend to build a mine. The cycle dictates what you do in mining at many parts of it, right? So I don't know where we'll be. Ideally, we don't want to construct a mine here. Okay, we want to advance it as far as possible, permit it, and bring in someone to take it on. And the reason I say that is, porphyry and porphyry related style deposits require enormous amount of capex. Okay, so with that said, that's how we looked at the business when we started the company. And going after porphyries, we said, okay, let's make sure that we tick some easy boxes. Okay, the number one easy box is, are we in an area of infrastructure or not? So we looked at dozens of projects before we put this portfolio together. Most didn't pass the smell test for that reason alone. They just were too remote. Secondly, are we in an area where there are known environmental forest reserves where you're hoping to excise, part of your package out? Those were out. Okay, so we went to an area that has excellent infrastructure, has educated labor for mining, which is not common in Colombia. I say that because we're contiguous to a company named Ari Mining, which holds the Marmato deposit, which is a mine that's been in production continuously for more than 500 years. So you could imagine that everyone in our area of influence has mining in their system in one way, shape, or form, at least if not currently, in their ancestry. And so we're sitting in an area abutting a multi-million ounce gold deposit that is on the cusp of starting large scale construction. And we're right next door with an amazing opportunity.
Right. So how long has this been going? I mean, when did you start the company?
It started earlier than we planned. I mean, this was an April 2020 start date, and that was due to lockdowns. You were locked down, as many of your viewers were, with jobs. I was locked down. We'd sold Continental in March of 2020 and got locked down 2 weeks later. It had nothing to do. So my team got very bored very rapidly and said, let's go to work. So this started in April of 2020. To put together the flagship asset, it took multiple deals with different underlying title holders to put it together. And then we had to go and get the project titled for exploration. It was an application format. So we went public in May of 2021, and really, the titling took place in October of that same year. So we're just over a year into this where we actually physically have a project that can advance.
Right. So I want to know what you've got here, because I think sometimes when people are successful, like you have been in terms of being able to sell a company or project for this sort of quantum that you did, you get a reputation, and it's a good reputation. You're backable because you've done it. But what happens is the next deal kind of gets ahead of itself in terms of the valuation, and there's a bit of backfilling needs to happen. So what is it? What have you? So how much have you raised to date? What have you done with the money, and what have you got today in terms of the value as it says?
So we've raised about $40 million Canadian from beginning to where we currently stand, including cash on the bank right now. Um, and you are right. I mean, our valuation came out of the gate ahead of itself. There's no question about that. Our flagship asset, Guayabales, was undrillable because we didn't have the titling part complete. Our secondary asset, which we put 4,300 meters into, had some good smoke and some decent intercepts, but not what we're looking for. But at the end of the day, look at my success is really based on my team, and everyone says that, but I pride myself on having overwhelming geological talent as well as operational talent on the ground. But let's focus on the geology talent. It's what we recognized here that brought us this opportunity. Marmato, a mine that's been in production, as I mentioned, for 500 years, is sitting there. And incredibly, no one ever seriously thought about the context of Marmato geologically and what that could mean for what's sitting around it. Matthew, you know as well as anyone that there's a saying in mining, the best place to find a mine is next to a mine. It's always been true and will always be true. And we're sitting in a porphyry camp, okay? And the way porphyry systems form, is they're all sort of the same all over the world, right? You get some shape, of a system that's, let's say, 5 by 5 kilometers in scale. And within there, you get a bunch of fingers that come up. Each one of these fingers are coming off an intrusion, and that's a porphyry finger. And the way porphyries work, the first one that comes up carries the most grade. The one that comes up last is generally empty of any metal, and you get a mix in between. And then you get brecciation as a later event. And then the last event in this environment is what we call CBM veins, which are the late stage carbonate base metal veins. Okay, so that is the context of all porphyry settings in the world. And typically, but not always, those late stage veins form around the peripheral of your 5 by 5 kilometer-ish shape. And Marmato is just that. It's a late stage porphyry vein system. So recognizing that, we said, well, where's the porphyry cluster? And that is how we put together the project that we call Guayabales. Okay, and we approach this methodically, more in a way for exploration that a major would look at it versus a junior. What does that mean? I mean, so okay, let's put boots on the ground. Let's go out and do very hard work and difficult topography, ridge and spur, soil sampling. Let's generate anomalies. And then instead of falling in love with one, as is typically the failure of many companies, let's approach like a major, budget 20,000 meters of drilling, which we did in 2022, and try and first pass test each one of these targets that we generated. We had generated 7. Okay, we never quite drilled all 7. We drilled 5. Okay, of the 7. You probably know very well from being a mining investor that odds of success in mining are typically about 1 in 1,000 that you'll ever find a mine. So Mother Nature really blessed this area. Okay, we drilled 5. Of the 5, 1 is a complete miss. Okay, 3 we made discovery on. Their names are Olympus, Donut, and Trap. And our main discovery is called Apollo. Okay, and that is what has generated all the excitement. I think we've got I know we have a multi-million ounce system in the future. Obviously, we'll have to do a resource estimate on that down the road to confirm what I'm saying. But this is a porphyry system that has been brecciated. That is what we've discovered at Apollo. Now, you might ask, what does that mean? Okay, because geology goes over most people's heads. Well, there was an existing porphyry system, and the one that was existing probably didn't have that much metal in it to begin with. A brecciation event came in and blew through the porphyry, so it effectively enveloped the porphyry. Porphyries are like a cone, okay? So imagine a cone shape. They all look like that, okay? And so it's been brecciated. What does brecciation look like to you and I that aren't geologists? A jigsaw puzzle that's been put together on a table with jagged pieces. When you look at it on a white table, you see a lot of space between the pieces that are connected. You can still see the table behind. That means there's a lot of porosity. Porosity means there are spaces for fluids to get dumped into that matrix and get trapped. And that is exactly what we have here. What makes the Apollo target or system so exciting is, and it, like every great system in the world, there's always a common theme. There is always more than one of pulse or event that has dumped metal into the system. Here we have at least 3. Okay, we have a porphyry source. It's not the one that the breccia blew through, but one probably nearby somewhere. Hopefully, we're going to drill a target. We started today. We announced in our release we're drilling a porphyry target. Fingers crossed. I don't know if we'll hit, but it's very close. That could be the source. But then secondly, we have at least 2 stages of low sulfidation to intermediate sulfidation veins. So these porphyry veins that have cut through the jigsaw puzzle. So typically when you think of veins, you think of little narrow fingers like this. But when the veins hit that jigsaw puzzle, they lose their shape. The metal dumps out of the veins and then refloods that same matrix. So as a result, we're getting a system that is very enriched in copper, silver, and gold combined.
Okay, thank you for that. You've said a lot. You've also got a little bit technical in places for some of the audience here. And Brett, it'd be great to maybe if you come back on, or maybe one of your team wants to come back on and get even more technical with us. That would be fantastic too. But in terms of the way that porphyries and breccias work, I think there's a kind of broad understanding of that for people who've been investing in mining for a while. For those who are coming into this space, it's kind of confusing when you're looking at some of the drill results. I think some of the headlines from earlier on, you had some nice big, huge intercepts with some quite nice grades. 2 up to 3 grams per ton. Fantastic. And then you've got even bigger intercepts with sort of lower 268 at 0.89 grams per ton. And I get that, and there's some other there's a little bit of silver and copper, etc. in there too, but not a whole bunch. For that audience, which is a big part of the I think the retail audience, how can you explain what the next few months are going to look like for you? Because there are you're hunting for breccias and and porphyries, hopefully, and they can give you some big returns, but it doesn't happen overnight. They're not that easy to find, as you say. 1 in 1,000, or even worse than that, of exploration stories will end up as a mine. How do you plan for success? Because you can burn through a lot of money, burn through a lot of drilling, and it burns money. How do you come at this, and how should people looking at you view the time frame in which you're going to deliver success?
So we have a 5-year business plan to be in a position in 5 years from now to make a decision to construct, okay, the mine. I know that sounds like a long time, probably to some viewers. However, on average right now, if you look at independent studies, it's about 10 to 12 years for a mine from discovery to go to production. So we're only 1 year in. We only announced our first assay result at the Apollo target in June, late June of 2022. So this is a brand new discovery. Okay, so for the 2023 season, as an investor, you will see the excitement of growth, right? So the excitement of growth is one. We're going to continue stepping out and expanding this system. The exciting thing about it is we do not know where the edges of it are yet. Okay, it is wide open. We put out results last week. We drilled 425 meters at just over 1.5 grams gold equivalent. Importantly, that drill hole, which was more than 750 meters in total length, bottomed in mineralization. It was continuing. Okay, we have visuals from another hole going in a completely different direction that intercepted 600 meters of mineralization, bottoming in mineralization. Assays from that's hole 28 due in the next 3 or 4 weeks, according to the lab schedule. You'll see growth. You're also going to see us prove one thing that we haven't proven yet with the drill, that the system comes to surface. Right? One of the questions that we were getting asked always was, "Oh, you have these wonderful intercepts, but we see them typically start 100 or 200 meters below surface. Does this need to be an underground mine?" And my answer to that was, "Look, this was a blind discovery. When we discovered it, we didn't know where the system might outcrop. A drill hole went in, and oh my God, look what we have. We now understand that we caught it, from a deeper part of the system where the discovery was made. And as we move southward, it actually comes to surface. In the press release we put out today, we announced that we've started our 2023 program. First drill holes going down, a brand new drill pad located where we believed it came to surface, and we announced we're in the mineralization, and that mineralization started right at surface. So we have found the outcrop of the system. That is big, right? Because when you're looking at a project, is this going to be an open pit or underground mine? I don't know yet. Nobody knows yet, but I at least want to offer the flexibility to have both options by drilling. So you're going to see very aggressive step out drilling, as well as targeting high grade mineralization near surface in 2023. 2024 will move to resource definition drilling as well as growth, and then we'll look to come out with a resource estimate in late 2024.
Right. Okay. And just put that in dollar terms for people. Obviously, raised some money back in October, $10.7 million bucks. Your literature talks about having just under $5 million at the moment. What's the kind of what's the burn rate, and how's that attributed in terms of money going in the ground for drilling versus money going on the ground for targeting for the drilling?
So we entered 2023 with around $9.5 million cash, US, just to correct on that. So we're in good shape. Obviously, we're going to need more money by the end of the year, early next year, again, to continue. Look, most of our money goes in the ground. I'm a believer in the 70-30 split. 70% of your funds go into the ground. That does include surface exploration, which is quite inexpensive because we're not doing any geophysics or anything costly. And then the other 30% goes into corporate overhead, but more importantly, into sustainability, right? I mean, you need to have a ratio of spending on your sustainability to your exploration. You cannot do one without the other in a country like Colombia, or virtually anywhere in the world. And so that goes. And we have a model, that we built for Colombia. It's a Colombia-centric model of exploration and sustainability that goes hand in hand. And what's great about it is our model works for a startup junior and continues to work for a company the size of a Barrick Gold or a Newmont Mining. It's a scalable model, and the ratio of spend will go up commensurate with the scale of what you're finding.
Right. Okay. And obviously, you got a really tight share structure, I noticed. And why? Why? What did you do at the beginning, and why have you done it like that?
Experience, Matthew, experience. So been there, done that. Okay, so you know as well as I do that, to go from where a collective mining is today to a construction decision, we are going to have to dilute by raising money multiple times along the way. Too many companies I've seen come out with share structures where it looks great on the day out of the gate, and then 2 years later they're scratching their heads about a rollback because too many shares have been issued, and it doesn't matter what the fundamentals are. The enormous share structure, the amount of shares outstanding tend to hurt the company. So this is about planning for the future. Some people don't like it yet. They say, oh, it's too tight. Some institutions have said, I like your story, but we'll wait. Okay, great, we'll wait. But if you look at Great Bear Resources, which, correct me if I'm wrong, but I believe got taken out for around $28 Canadian, I think was the final share price. That was because they kept a tight share structure. We don't see takeouts at that kind of a share valuation or share price. Maybe the valuation is normal, but the price. So let's hope we can replicate that, move rapidly to create shareholder value with aggressive exploration and growth. And maybe, who knows, one day we'll be lucky like Great Bear and get taken out for an enormous sum by some other gold company or a base metal company.
Right. Okay. And so I do love learnings in all of this, and given your experience, it'd be remiss of me not to ask. So you've told us what you sort of set out to do, and you've told us what's happened recently in terms through the drill bit, etc., and what you hope to be able to deliver through to 2024. Obviously, last year was a difficult year for precious metal companies. You were busy, based on the amount of press releases going out, and some of the headlines there. You were busy. What are the things that you think you did right last year that perhaps weren't rewarded, that perhaps may garner some kind of reward this year?
Well, I saw on Twitter, someone sent me a chart from someone that writes a tweet. Or I saw a guy named golddiscovery.com, and he showed the value of drill holes in 2020 for what it did to companies versus 2022 where nothing happened. So we were overlooked for our discovery, I believe, right? I mean, you have a monster in Filo Mining. That's kind of the bellwether giant company in Canada right now on the exploration side, trading at north of $3 billion market cap. And here you have a collective mining trading at, well sub a 200 million market cap. Now, I'm not saying we're worth 3 billion. We are not at this point yet. Okay. But there's a disconnect in terms of valuation based on who made big discoveries in the right part of the cycle and those of us that did not. So I think we're going into a much more exciting part of the cycle in 2023. For commodities, I'm generally not a gold bull or a silver bull, but I'm optimistic based on the global situation that we're going to go back to money printing. We're going to see a stronger gold price going forward, and I think the interest is coming back. We're seeing it now. I can tell you this, Matthew. We raised money in late October, okay, of 2022, and I said to my team, this has to be the bottom because we've never struggled, or I've never struggled so much. Got told no by so many people, for an investment, given our past success, that just wouldn't put up the money. And it's not because they said, oh, we don't like what you're doing. It was, we have no liquidity in our funds right now. In order to buy your financing, we need to sell something that's got no bid. It's got illiquid, and therefore we cannot. And so that was the hardest financing I've done in many, many, many years. So I think that's a sign of better things to come.
Yeah, well, okay, but the bottom for what? Bottom for equities, certainly not the bottom for gold price. Gold price has been absolutely fine most of last year, and certainly very strong beginning of this year. So the massive disconnect between the equities and the commodity prices broadly across commodities, certainly for gold. You don't need gold to move for you to be successful, do you?
Absolutely not. We just don't need an environment where it's crashing, because then they throw the baby out with the bathwater, so to speak, in that environment. No, look, we'll continue to add value with the drill bit. We have, fortunately, we have the ability to raise money and have been successful at that, and that's our growth curve for the short term. Short term being the next 1 to 2 years for this company, not the next 1 to 2 months. Although that will be drilling too. So this is, if you want to own drilling, if you like excitement of the large growth story, we're one of the few that is out there that is demonstrating consistency. And consistency in drilling is key. And Matthew, I'll say this: there's always a common theme in mining. Most projects get worse with drilling, but deposits get better. The good ones tend to get better as you drill more, and that's what we've seen here. So we've drilled, 2022 we've completed 30 holes. Okay, we have assays up. We're still short 6 holes, so we have assays up to hole 24. Okay, of that we've only missed on 2. The rest have been significant hits. That's incredible odds, incredible success for a grassroots discovery. Remember, you don't know where the dimensions are when you start these things, right? You're really blind and hoping. You come up with a theory in-house, your team. Oh, let's put the rig and let's go here. Okay, let's do it. So when you're onto a big system, good things tend to happen, and we are seeing that in our instance.